The RBI governor will be announcing the decision of the Monetary Policy Committee tomorrow, and a rate hike does seem imminent. In fact, a BT poll shows that all market participants are expecting a 40 to 50 bips hike. The RBI is likely to increase key rates, focusing more on inflation than on growth. Let's head across to Sakshi Batra on what those expectations are from this MPC meet.
In under 12 hours from now, RBI Governor Shakti Kanta Das will present the policy decisions of the June 6 to June 8 meeting of the Monetary Policy Committee, and here's what you can expect. Well, we'll need to brace for higher rates, as there is a wide expectation that the RBI will continue to hike the repo rate after a 40 basis points hike that we've seen already in an off-cycle raise. Now, the expectations range anywhere between 25 to 50 basis points this time around. Our BT poll indicates that 41% of the participants believe the RBI will go with a 25 bips hike. Also, a 25% respondents believe that there could be a 40 basis points hike this time around, while a 34% section of the participants believe that RBI could hike the repo rate by 50 basis points this time. Now, a rate hike will not be surprising, as the move will be in tandem with what the central banks across the world are doing to tame inflation. Look at the Australian Central Bank, for example. Just yesterday, they have raised their interest rates by 50 basis points as well. Talk about the US Federal Reserve, that has been aggressively doing the rate hikes as well to tame the red-hot inflation, which is at a 40-year high for them. And it is a priority for economies worldwide and for India as well, as inflation back home has surged across the board, making everything from groceries to electronics quite expensive for the common man right here. Now, analysts also expect that the central bank will raise the inflation projection for the ongoing fiscal year from 5.7% earlier to a more realistic number above the 6% mark as well. Now, most economists do rule out another hike in the liquidity measure CRR this time around. Now, what could a rate hike really mean for the common man, as well as an immediate effect on loans and EMIs, where all of those will be set to rise from here on, as banks will continue to raise the home loan rates. All your new auto loans and personal loans will also get expensive in tandem with the rate hikes too. But the big question that we have been constantly asking is that why are the deposit rates not really rising in tandem with the lending rates right now? Well, while banks have immediately passed on the hike in the repo, in fact, in a lending rate as well, but the deposit rates have not really moved as much. Experts here believe that deposit rates will not move so soon, as the market continues to have surplus liquidity even now, and banks don't see the need to attract more deposits as of now as well. So in a way, savers like you and me will continue to suffer widening negative real interest rates amid the spiraling inflation.